I'm seeing it over and over again in the comments section and even in my group that people are done with PayPal and are completely out on this stock. And I know there's a lot of frustration out there and I completely understand. So let's work through that frustration and why people are selling and getting out of PayPal stock. And I'll let you know if I'm considering selling PayPal stock as well. Just make sure you like the video if you like getting the truth without the hype. Now, there are three main reasons why people are wanting out of PayPal altogether. So let's go through each one and I'll let you know if I'm done with PayPal or not as well, because to be honest, it has gone absolutely nowhere. So the first reason is too much competition. I mean, look, you got Apple, you got Zeal, you got Square. I mean, even Elon with X may very well jump in there as competition as well. Although that one I won't say discredit, but I don't really worry about as much, because just because Elon's behind it doesn't mean it's going to be highly successful and change the world and dominate all the competition and everything else like that. It just hasn't gone that way before. He's had plenty of things that didn't do well. So until they actually have something tangible and then there's actual proof of that, I'm not really that worried about it at this stage. Not saying it can't be done, not saying it won't happen, or it's not a possibility, but it's not something that I would build into my stock price right now or anything that I'm worried about right now. I've got to worry about what's tangible in front of me. And a lot of folks are out there saying, hey, there's just too much competition. The competition is eating PayPal's lunch. There's just no way they compete. But I think this point is completely irrelevant. And hear me out, guys. There's actually a couple big reasons why this point is actually, I won't call it a false point, but definitely people's feeling behind it. They're not actually dealing with facts. They're just dealing with what they think is happening, not the reality of what's actually happening, and more importantly, the reality of a lot of these products. So when I think about Apple Pay specifically, and it's one that comes up all the time, you got to remember, one, Apple Pay's been around for a long time. It's not like this is a new product. It's been around for a long time. They just decided to market it differently, change it up a little bit towards more of a direct competitor with PayPal, which you can actually see that inflection point in both companies' earnings when Apple decided to do that. And it was a huge, huge shift and a huge chunk of change that came to Apple's bottom line when they decided to do that. Which, of course, if it's true that Apple would then be eating PayPal's lunch, that means that should have come out of PayPal's bottom line, right? I mean, it was something like $40 billion or something like that. If all of a sudden that was pulled out of the market and over to Apple, that means it had to come at least partially from the biggest of the big dogs, PayPal, right? That's where it had to come from. But the earnings told a completely different story. As a matter of fact, PayPal actually had better growth that quarter than they had the quarter before Apple started directly competing with them. So clearly that's not true, because when Apple decided to flip that switch over to PayPal's, and every subsequent quarter since then, Apple has grown and so has PayPal. How is that possible? I mean, if Apple is taking from PayPal, that can't be true, which is the point I'm trying to make here, is those narratives are not dealing with facts. And the reason why is because you have to understand what TAM is and where the market share is actually coming from. The market share is not coming from PayPal, because the TAM overall is much larger than PayPal and the rest of it. It's not a saturated TAM. It's coming from a saturated TAM in a different sector, which is banking, which means it's pulling business from traditional banking lines, from certain credit cards, from certain other banking segments like that, and pulling it over here into kind of the fintech space. And kind of think of it this way. Let's say it's a $5 trillion TAM per se, 10 trillion, whatever number you want to put. We'll say 10 trillion just to make the numbers easy for me, since public math isn't my best. Let's say it's a $10 trillion TAM out there, and let's say only 4 trillion of it's being used right now. That means Apple can win, PayPal can win, Zeal can win. Everybody can win across the board because they're grabbing that other 6 billion before they're ever having to directly compete against each other. That's what I mean by this narrative about competition is completely false. It's not saturated. It's not like the car market where, yes, you can clearly see that, hey, when Elon, more EVs, go over here to Tesla, it's pulling away from ICE vehicles because that market is saturated. There's not a new TAM to go after. They're all fighting for the same TAM. It's just a question of, do you want ICE or EV? But the TAM is already saturated. That's completely different if half, the people that wanted cars didn't own cars at all, none at all. Then at that stage, you could say, yeah, it's not saturated and both legacy auto and Tesla could grow. But because it's completely saturated, you have to take from each other. That is not the case in fintech at all. We are at the beginnings, or still in maybe the middle stages, maybe, in regards to the TAM for fintech long term. We are not at the end of it to where everybody has fintech and it's just a question of switching from this fintech to that fintech. It's not the case at all. And that's where that narrative to me is completely false. And that's something that I don't worry about. That would be the competition. Let me illustrate this best here with a chart, because keep in mind, a lot of these products in the fintech space, have been here for over a decade. Now think about that. And I know PayPal hasn't innovated in probably a decade. It's not quite a decade, but the point being, they have not innovated in years, while all the rest of the fintech that's out there has been eating their lunch. I would agree with that there, that they have been absolutely innovating faster. They're well ahead of PayPal now, all those other things like that. But look at this chart right here, guys. Take a look at it. Does that look like the growth rates, and does that look like the growth of a dying company who is having their lunch eaten by their competitors? Remember, over the past decade, those competitors have been there. Apple has been there for a long time. Plenty of other competitors have been there for a long time, and yet PayPal continues to grow despite not being innovative, despite not actually being, the leader in the space anymore or anything else like that. They're still growing. So to me, when I look at that, I go, well, what would have happened if they would have innovated? What would have happened if they just catch up to the competition, much less actually innovate above the competition? Not saying they can get there, but that's definitely Alex's goal. And if they're able to get there, what do those numbers look like then? And what new thing is the competition doing that changes that growth rate? If basically, here's PayPal, they hadn't innovated in years. FinTech maybe started off below PayPal, clearly passed PayPal a while ago. Now they're way up here somewhere. What new thing are they going out that could create a gap larger than what it is, especially now PayPal's kind of tilted their innovation up again? Again, not catching up to everybody yet, but definitely tilting their way back up again. What innovation is everybody else doing that PayPal's not doing or can't do that's going to create a larger gap to create that gap necessary for them to stop growing? It's got to be like way up here, and it doesn't exist, and I don't think it's going to happen, more importantly. So whatever it is that's changing that growth, it must be a secret of some sort. But let me let you in on another secret. Get early access to one of the biggest discounts ever for a full membership for my group for the 4th of July sale. I'm kind of quietly releasing it right now to you guys that have actually watched these videos. I know PayPal isn't one of my most popular videos, but it's available to you guys right now. Just check out the pinned comment below and see if a membership's right for you. And I may have opened up a few more founder spots for a few of you guys out there who really jump on this early. They'll probably be gone by the time most people watch this video, but I did release a few just for you guys out there. So make sure you check out the pinned comment and see if a membership's right for you. All right, so point number 2, it's not innovative at all. Now, PayPal used to be the innovator. They used to be the, creme de la creme, the best in the space, the most innovative in the space. But I can't lie, they've not been that at all. As a matter of fact, under the old regime, they weren't innovating. Matter of fact, they were almost basically going in the opposite direction that they needed to go to in regards to innovation. I mean, heck, they just got Face ID, which is something that's awesome, but it's been around for years in the fintech space. It's nothing new. And there's no doubt in my mind that under the old regime, we'd probably never get that feature. If we did, it'd be 5 years from now, 8 years from now, whatever the case was. That's how far behind they used to be. So that's a completely fair criticism and a valid criticism, but I would say that is changing rapidly. The beauty about being behind in terms of innovation is if you put all your guns towards it, like Alex is doing, you can start to catch up pretty fast. Now, I'm not saying they're as innovative or they're back in the front lead or anything else like that. I'm not saying that at all. But in terms of them moving in the right direction and closing that gap very rapidly, they're closing the gap very rapidly. Now, I understand that's the easy part because you're already taking something that's already been out there. So it's very, very easy to replicate once something's been out there for years. Understand that completely, but you got to take these things in steps. And when you're not innovative at all and everybody else is up here, well, you got to at least catch up to up here. Even if that's easy, you still got to do it. And the prior management team wasn't doing it. This current management team is doing it. So basically they were years behind before, but in 6 months, just 6 months, guys, they have made up a rapid amount of ground and are truly catching up to everybody else. And that's important to understand because it's not like Alex is going to push the pedal to the metal for 6 months or 8 months or 9 months, whatever it takes for them to get there. And then all of a sudden take his foot off the gas and go, nope, never mind. We're good. We're right there with everybody else. Let's take our foot off the gas. That's not what he said in earnings. That's not what he said in his vision for PayPal in the future. And that's not what we're seeing in regards to the changes that they are making. If the changes that he laid out at the beginning of the year, but if all those things come true and he's able to deliver on them in the 18-month window that he gave us to basically deliver on all that sort of stuff, there is no doubt in anybody's mind that they absolutely will be right back at the top in regards to innovation. Maybe not the most innovative, but they're definitely, fighting right up there with the top 2, top 3 spots there and basically dueling neck and neck at that stage. That is a massive, massive win to basically go from the laggard who's dying to all of a sudden right there at the top in regards to innovation in the first place. Now, they are not there yet, guys. Let me be very, very, very clear. They are not there yet. But in 6 months, we have rapidly come from basically last place to at least catching up with the pack in regards to innovation there. Now, that doesn't guarantee anything in the future, but in regards to me thinking that they at least now have a fair shot and the right management team and the right mentality and the money being placed in the right places to compete for that top spot in regards to innovation, I don't think anybody can deny that that's at least the trajectory that they're on. Now, again, they're not there yet, but to basically say they're not innovative and they're always never going to be innovative, you're right, underneath the old management team, 100% true. I would 100% agree with you. There was no point in investing in PayPal at that stage outside of just the fact that it was really, really cheap. But with this new management team, they aren't just gunning to catch up to everyone. They're gunning to be the best and the most innovative. And so far, they have made all the steps in the right direction. Now, we got a long way to go, but in regards to steps in the right direction, they're trajectorying up a lot faster than the rest of the competition is. On to the last reason right here, and this is by far and away the number one reason why people want completely out of PayPal stock. If you don't agree with me the first two, there's no doubt in my mind, this is the number one reason why everybody wants out of PayPal stock. And that is the stock price going nowhere. That's hard to argue. I can't disagree with that at all. I can absolutely, anybody can pull up a chart and show exactly what's going on with the stock and exactly what all's happened with the stock. Even once we kind of formed a bottom, it's basically just kind of floated around sideways for many, many months now. But my question to you is, as a long-term buy and hold investor, not a trader, long-term buy and hold investor, who freaking cares? This is exactly what you want in a stock in regards to the long term. The facts are we have a continued growth in revenue and we are seeing EPS once again reaccelerate. And when you look at things like valuation, it's trading at a 14 multiple right now with Walmart trading at a 28 multiple. So are you trying to tell me that Walmart has twice the growth prospects of PayPal? I'm sorry, I just don't agree with that statement at all. I'm not saying I'm 100% right or anything else like that. But I think most folks, and you can look right at what the analysts estimate, the growth rates for PayPal are significantly more than they are for Walmart, but yet Walmart is trading at twice the multiple. So basically, we have an extended time to add shares on the cheap, which is exactly what you want as a long-term buy and hold investor. And just as importantly, they're also buying back shares like crazy at these depressed prices, which of course is better for you over the long run in regards to bumping up that EPS and you getting more profitability on the back end in regards to that. That's exactly what you want a company to do that has a lot of free cash flow like PayPal does, is putting that into buying back shares when the shares are stupid cheap. And of course, the longer they stay cheap, the more shares that they can buy, which means the more shares that come off the market, which long-term benefits us massively as long-term buy and hold investors. Stocks get decoupled from the underlying performance of the stock all the time. It happens, guys. It happens with every single stock on the stock market at some point in time. And those are golden opportunities for those investors. Company performance is what matters. The stock price is not what matters in regards to that. And if you don't believe me, just look at when we had Meta in the 80s, Nvidia in the low 100s, that's pre-split. Google in the 80s, Amazon in the 80s. I mean, were those all bad businesses? I know that was a narrative. And yet, no, that's not what the company fundamentals said. That was a massive decoupling. You had Meta down 70%. A lot of those stocks down massively during that time because the fundamentals got decoupled from the stock price. So when you get into the whole stock price is what matters, not the fundamentals of the company, that's how you end up in a situation where you don't take advantage of deals like that. I mean, just use Meta as an example because I'm invested in that. I have a lot of group members that were invested in that. And I remember that time frame very, very well in regards to the stock price. It went down for 15 months, guys. 15 months it traded down. And I heard it all. I heard people saying it was dead. The stock price is going nowhere. I'm getting out of that. I'm putting my money into, Coke or McDonald's or some other stock that was flying high at the time, whatever the case was, all those sorts of things like that. And the number one thing I hear in my group and the number one comment that I see whenever I talk about Meta stock is either A, I should have invested, but I didn't because I got scared or, whatever the narrative was, you fell for the narrative instead. Or from the people that did buy, it was always, I wish I would have bought more. Well, guess what? If it would have traded down for another year, you would have had a whole nother year to buy at those depressed prices, which of course means when it inevitably went on its run back up, because that always happens in the end, you would be sitting on even more money because you would have been able to double up your position, maybe even more if the prices would have stayed down for longer. And that for me is how I view the situation going on right now with PayPal. Now, I'm not saying it's going to perform like Meta did, but again, I didn't know Meta was going to perform like that either. I just knew what fair value was. I knew it was significantly below fair value. Therefore, at some point in time in the future, stocks always return to fair value. And that's exactly what I based that decision on. There has never been a company in the history of the stock market where the company performed and the stock price did not eventually come back to fair value. That has never happened. So what is my plan with PayPal stock? Oh, you guys know, and if you don't, I know my group members know, I say it all the time, I hate PayPal stock because it's very, very frustrating to own. It is very, very frustrating to be sitting and seeing other things run up and not seeing my stock move up. However, just because I hate it Doesn't mean I don't understand that. To me, the fundamentals are still there. So I'm going to continue to buy at my price targets whenever they hit. And I'm just going to continue to accumulate shares because share count is what matters in the end. That right there is the biggest deal. Cool, you can have a better average than me all you want, but if I own 10,000 shares and you own 1,000 shares and the stock goes some great place in the future there, you're going to wish that you had 10,000 shares versus 1,000 shares. So that's kind of how I choose to view this. I'm going to continue to add shares. And even if I hate that I have to add shares, that's where I'm going to continue to put my money in the meantime, because that is one of the best places for me to put my capital in my opinion. And if you want to see my complete watch list with price targets, see all my buy and sell alerts in real time, take 5 courses for free, learn exactly how to do due diligence, jump on our live Q&As, jump on our coaching calls that are completely free for you, and so much more. Oh, take advantage of our $250 portfolio challenge that's going on right now. See if I'm adding a stock like PayPal to it, and so much more, guys. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. Well, thanks for watching, and we'll see you in the next one.